Good afternoon and welcome to Incap's Q3 result webcast. My name is Pauliina Tennilä and I will be hosting this event today. Our speakers today are Incap's President and CEO Otto Pukk and CFO Antti Pynnönen. Otto and Antti will present Incap's third quarter results, after which there is time for questions and answers. You can post your questions with the Q&A function already during the presentation. The recording of this webcast will be available on Incap's website later today. So, Otto, please go ahead.
Yes, good morning from my side. I'm currently over in our US unit, so it's quite early, and that's also the reason for why we started a little bit later than usual. So it's not too inhumane time for me. So I appreciate everybody logging in a little bit later. Yes. About the Q3 results. So we'll do it, of course, as always. We have a walk through with Antti, and then we try to leave as much as possible time for questions. Third quarter, it ended and went as we anticipated. We had seen some uncertainties on the market and some postponement of some customer project, and we flagged this already last quarter release, and the outcome was what we expected. So a bit lower than we had last year, and in that sense, low point of the year. We're quite happy with the profitability. We worked very hard with the different teams to protect our EBIT, and I think it shows the strength of our operational model that we can keep also with the lower volumes and less utilization, the same kind of double-digit EBIT throughout, even if some of the units were a little bit struggling. Looking forward, we see that the pipeline for Q4 is promising, and I think we have seen the low point of the year, and overall we remain within our steering that we have given. So no surprises in the big picture. Impacting, and I think Antti probably can go deeper in this later, but impacting, of course, the result is also the foreign exchange courses, especially when it comes to US dollar and Indian rupees, and you see here the development of both, and this has had an impact on our figures as we wrote as well, and should be kept in mind when you look at the numbers. We keep on investing, of course, and developing our business, even if the volumes were a little bit lower in Q3. We have invested in India in new capabilities for flying probe and testing capabilities, and also increased the SMT capability and capacity in India, as we expect more demand here as we develop the unit. Also in Slovakia, we have done a milestone project, changing the ERP and updating also the MES platforms, and so this will take the Slovakian unit into a new era when it comes to digitalization of the production. So we keep on adding on and developing our production infrastructure, and that we take a lot of pride in. Something perhaps newer is also that we are doing some investments perhaps that are more value-driven investments when it comes to sustainability. And Incap is now solarizing and going in more and more into renewable energy, so usage and so for our manufacturing. We have now installed solar powers in UK during this period, and almost half of the UK energy consumption or electricity consumption will be covered by this. And perhaps the biggest investment was announced here just a few days ago on US side, where we are investing in a major solar power. I could even call it like power station, and there we have the possibility to cover 100% of the electricity need of the U.S. manufacturing with sustainable energy, and so when we produce in the future in U.S. we will do it totally green when it comes to electricity. So it's interesting development and this in combination with our previous commitments and investments into renewable energy will take our group very nicely forward when it comes to our footprint and how we affect the environment. Also, of course, we during this period continue to work with our reporting and we reviewed also the double materiality assessment that we had, and so that been done a lot of work also with sustainability and ESG during the period, apart from the investments. Quality, of course, is in core and of us, and a part of what I'm doing currently here in US is also reviewing the development they've had on the new ISO certifications, and they're now aligned themselves with the rest of the group when it comes to also environmental and health and safety certificates, and done an excellent job here on implementing these new management systems and making our group now more unified when it comes to the different certificates we carry in the different units. So also a great job from the US team. I'll hand over to you, Ante. You can dig in more deeper in the numbers, and then let's get back and once you're finished with that, then I can comment on the outlook moving forward.
Yes, sounds good. So then let's focus on the third quarter. And then if we start from the top line, so we recorded 51.8 million in revenue and EBIT was 6.7, 13% in terms of the proportional EBIT percent. And then regarding the comparable figure, quarter 3 24, the delta is 10 million, and as we also wrote in the release and explained, so there is various reasons, and then 1/4 of this delta can be explained by the unfavorable exchange rate differences, mainly US dollar to India rupee and then India rupee to euro. On this slide, then we have illustrated the quarterly profitability and the revenue historical trends, and then 13% EBIT is of course solid, and then we would like to also highlight that there was this exceptional item, so the net proceedings from insurance was explaining part of that one, so 1.5 million impact booked under the other operating income in Q3 explains 13%, and then adjusted one EBIT wise was 11.1%. Inventory is illustrated here. There's a slight increase there, but then it's more or less normal to business fluctuations. Of course, then the net cash position is still very, very strong for Incap, so it's illustrated as a negative sign. Even cash deducted by the interest-bearing loans is a negative sign, so almost minus 39 million. So there's a lot of opportunities and firepower to move bigger strategic moves in that sense.
Yes.
Outlook, yes, Otto.
Yeah, no, you can go as well. But yeah, outlook we remained or kept the same. So it's still valid that we gave that we estimate that our year will be somewhere on 210 to 230 million and an operating profit of between 23 and 29. So our outlook we haven't changed, and it continues on being valid moving forward. That said, as I mentioned in the report as well, we see positive development when we look at now on Q4 and but it's still within the given framework that we have seen. But I think we are ready for questions. So please shoot, and we'll try to answer as many as possible.
All right, thank you, Otto and Antti. Here comes the first question. So your guidance assumes a strong Q4. What gives you confidence that the target is achievable?
Yeah, no, Q4, of course, we already know we are within the Q4 already, and we know very well what orders we have and so that we're working on. So there we have quite high confidence when it comes to the outcome. Of course, always something happen, but it's very unlikely that we won't hit our marks in that sense.
So maybe follow-up question on that. Is it based on already confirmed orders, or is it more like the signals about improving customer demand in the Q4?
Yeah, no, it's based on confirmed orders. When you talk about the running quarters, then we are already talking about actual orders, and so as I've said before, you know, in the 3 to 6 month period, we know quite well what we're going to do, because there we are already within orders. Then we have some forecasts, and so moving forward from that. But within this short time period, then we know very well. So in our business, you know, we are driving materials and so on. These material lead times often are you know, as long as 3 months or sometimes even longer. So we are very well aware of what we are going to do now the coming months in that sense. This is already production we have planned a few months back.
Yeah, and we just internally, we finished this quite extensive forecasting round in the beginning of October. So the feedback and the overview we received through this internal exercise is very much supporting this statement on Q4, and is actually the analysis behind this comment. We included in the Q4 report, and then yes, that's supported by internal analysis. Yes.
Thank you. How about the revenue and profitability? Can you comment anything about if there's differences between different units or different segments? How did it develop?
Yeah, we normally don't report those separately and comment on that. But of course, there is always differences between the different units and depending on what customers they are, or so there's always a variation. That much I can say. But yeah, we normally don't go into detail on segments or units.
And maybe that's related to the actual figures, but then how would you comment on the demand situation across different geographical regions? Do you see differences there?
Yeah, I think still we see some effect of the U.S. tariffs and uncertainties from some regions, and there is keep in mind there is not trade deals in place in all regions. So that of course is still in the background in that sense on some of the plans and demands and so. But I would say that in general we see that there is growth in some growth in defense and how to say defense and aerospace, which we have a quite small exposure to still, even if it has grown over the years. Then there's also around the data centers and AI an increase in demand, and of course that infrastructure is normally the bigger tier ones that are taking, but we see how to say in projects around the infrastructure, and so that there we see an increase in demand, and there we are also active in that sense. So otherwise in I would say that the general market demand is quite flat in when it comes to classic in the industry, and so we don't see any like huge increase in demands. It's more in these two sectors that we see growth currently.
Thank you. Maybe then a question about the financial expenses, and they were quite high. So how would you comment? Is that what is the reason behind high financial expenses?
So this is actually a very good question, and yeah, indeed, it's a big number that we reported under financial expenses. If we start to first a little bit understanding, so what that line consists of. So there are unrealized currency rate effects, realized currency rate effects, and then leasing related financial expenses, and then typical bank loan related interest expenses. So I think while I've been speaking with some investors, so the thinking has been that this whole amount, 5.5 million, are basically loan expenses that we pay to the banks. So about 700,000 cumulatively are the payments that we pay over the loans that we have, so interest fees. By far the biggest amount is unrealized currency rate effects, 3.5 million from that total amount. And those are basically internal currency related loans that we have granted to subsidiaries, and then reevaluating those on the end of month balance, end of month rate on the balance sheet. So these fluctuations explains the majority of that part. Then smaller amounts are related to the leasing liability, some 300K, and then there was a bit over 10% was realized currency rate effects. So biggest amount by far are these like currency rate fluctuations, and minority are real financing fees for Incap.
Thank you, Antti. And maybe while we are talking about the exchange rates, there's a question about if you could explain the effect of the US dollar and the Indian rupee more in detail, how it affects your top line.
Yeah, so I think I already mentioned that. So 1/4 of this gap between this quarters and last year comparable quarters, or revenue difference is explained by this difference, and it's just how the units are reporting back to the HQ, and then we consolidate with the average rates, and then compared to the last year Q3 figures. So then, for example, Indian rupee against euro has weakened quite dramatically. So from rate being somewhere around 90 rupees equaling 1 euro, now we are far over 100. So there's like over 10% of fluctuation. And then when I'm getting the figures in the rupees, as that's the functional currency of Indian entity, and then we are converting, just mathematically converting the figures to euros to consolidate the subsidiaries. So there comes this explanation and story behind this impact.
So perhaps to explain that the business in India, for example, is done. We buy and sell mostly in US dollars. Then this is converted into rupees, of course, when we do the reporting. And first converted into rupees, then converted into euro, and so there's a lot of, how to say, mathematical exchanges that take place in between, and also perhaps for understanding for investors and so is that Indian business, we have 3 big factories there, so that business is mostly in US dollar. Then we have, of course, our US factory as well, and so the majority of the business is in Incap is in US dollars that we trade in, and not in euro. Same, we have our UK unit there. We have, of course, British sterling, but majority, yes, are not in euros. This is converted for the reporting into euro, and perhaps that gives a little bit more light on the subject.
Thank you. Then there's a question about the inventories, and are you planning to increase inventories in the coming quarters?
Yeah, that's good question in that sense, that if volumes go up, then of course inventory go up as well. That said, we have been working on reducing inventories, and as you all remember, we had a big exercise on reducing inventories here when we were so to say overstocked with the destocking exercise we did here some time ago. But also that material availability is better on the market, and that means also that inventory levels can be taken down, and the materials we don't need to buffer up so much that what we did here in the past. So I understand the question in that sense, that is our current inventory level, which was a little bit higher than the previous month, an indication on the level. So yes, it's always some kind of indication, but you can't take it one-on-one because there's more factors into it.
How about the volumes for your largest customer? Can you comment on them, and how do they look going forward?
Yeah, I would say that our volumes to our largest customers are stable, and we continue to serve them on a high level. And so that said, we have been working very much together with them to reduce the cost for their products and find alternatives when it comes to different components that are cheaper, and so and that of course takes down the product price, even if we earn percentage-wise the same money. Then if the bill of material cost goes down in the product, then we will in absolute terms earn less in that sense. So that is affected a little bit now when we look at this year, and then so compared to some years ago, that we are producing the same or even higher volumes, but we earn less because the work have been done with the products, with getting them then cheaper and more optimized, and perhaps to give a little bit flavor on, but it's part of the service we do, and we try to help our customers to achieve their goal when it comes to cost levels and so on.
Thank you, Otto. A question about the shipments from India to the US. How much do you ship, and are you now suffering from these higher tariffs from India?
Yeah, I don't have the figures on the last quarter, how much.
It's about 20% so far this year is the volumes going from India to US. I spoke with Murti, fresh information from Murti, so yeah, that one.
So in that sense, it hasn't impacted so directly, but India and US is still settling their trade, and have not the trade agreement in place fully yet. So let's see where it ends up. But yeah, we continue to ship to US from India, and yeah, we'll hopefully in the future as well.
And are there any regulatory or structural challenges for you in getting a larger share of revenue from the defense sector?
There's no hurdles in that sense in any law or regulations, and so and we are working on increasing the defense segment as well. But you should keep in mind that these companies are old and conservative, and it takes time to qualify. And even if we have now qualified with several of these bigger defense giants, then it still takes time before that will become a vital part of our business in that sense. And that said, in the newer segments in defense, in drones and other so more startup companies in defense industry, that's there the hurdle is much less, and there we have I would say quicker developments, but defense industry is quite conservative, so it takes time, and also I think that if you look in the general concept of this, that we are not peaking yet in that sense. The defense demand is still expected to go up and continue up, and perhaps peak on somewhere on 2030 or so. So I think the work we are doing will pay off in that sense.
Okay, maybe we can then move to the M&A topic, the past and the potential future ones. And here there's a question about the US Penetronics acquisition and how much have the cross-selling potential from that acquisition been already realized during the first 2 years that you have been working or operating as one unit?
Yeah, no, I think we have quite good development when it comes to cross-selling opportunities, and we have several customers out that are have been exploring and are exploring the possibilities, and also we have some production started in this, so it has gone well. It's I think when we did the Penetronics acquisition, then several of our customers realized that now we are more globally positioned and look into possibilities to take advantage of that. So I think it has gone very well.
Thank you, Otto. Then there's a question about you have a lot of cash on your balance sheet, and any plans with that? And how about the M&A pipeline and the valuation of the potential acquisition targets?
Yeah, we have of course plans with that cash. M&A market is more active currently, and we have good pipeline. Antti, do you want to comment? I'm losing my voice a little bit.
Yeah, sure. So of course, as we know, Incap is very much looking after different ways of growing. Organic growth, of course, always is something we explore very, very aggressively. But then on the other hand, we see also this consolidation and a lot of opportunities on the market when it comes to acquisitions. And then what I think Otto was also saying here, that recently and within past, I would say 3 to 6 months period, there has been also like these bigger size acquisitions targets, let's say 100 plus, around 100 million and even higher figures, revenue companies available. And then with the firepower and with a very healthy balance sheet and then cash position and things like that, so then we are of course keen to explore all the potential targets out there. And then, growing through acquisitions obviously needs a pile of cash, and then it helps also to move quickly when the right target arises and so forth. So we are ready in that sense if there's a good opportunity and the valuations and everything matches and culture and everything is there for us to grab. So yeah, we are looking and ready to move quickly in that field.
So if there's a lot of market activity, has that driven the target valuations up? And is that your opinion, or how do you see the valuation?
Yeah, no, yes, I think we see somewhat higher expectations in that sense when there is more activity and also more competition on some of these targets. So yes.
So then there's one question about alternative uses for the cash, which might not be in your hands, but how about buying back your own shares?
So I think that if we are not successful with the M&As and so then of course there is a lot of possibilities there with share buybacks and dividends and so on, but that is more up for the board of directors. We in the management, of course, we want to keep the money and have that as possibilities to make moves with. So if that answers the question.
Yeah, and also from management perspective, we see that the bigger you get, the company has better ways of succeeding also in the future. Just because you buy bigger quantities of materials and then buying in bigger quantities, you get better prices, payment terms. You will be more competitive in the market and when other companies are growing. So I think that's why how the management sees that we should invest in the business and growing on the business through ways different ways. So whether it's organic growth and investing in the lines and the latest technology there, or then there's other way, which is inorganic growth. But end of the day, to be sustainable business also from 10 years from now. So it's key that the business is growing and then staying competitive when it comes to these elements I mentioned.
Well, thank you, Otto and Antti. I think we have been going through the Q&A now pretty well, and so thanks everyone for active participation. And would you like to recap once more, Otto, the Q3 before we end this session?
Yes, I will try to do so before I lose my voice, at least. But as always, thank you for the interest in Incap and for everybody who is tuning in. We are always open to take questions. So take the opportunity, of course, here in the webinar, but also you can contact us directly or shoot them in interest forum or where not, then we try to answer them. And as I said, we are looking on positive development in Q4, and so this was more of the last quarter as down the low point of the year, and now we move forward. So that said, thank you everybody, and see you next time.
Thank you.
Thank you.